morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin, and I'm here with my father, Carl Swenlin from DecisionPoint.com. And we're here to bring you the charts that we think you need to see as you enter this week. Carl's going to go over the market in general, cover a concept or two. I'm going to be looking at the sectors. I have run a scan for you today. So rather than go diving into industry groups, a lot of industry groups look good. So I don't think trying to find internal strength on a particular group is going to be as necessary. So what I wanted to do was run one of my scans that I use for my DecisionPoint diamond reports and see what we could scare up from there that looked interesting. And I did find a few stocks in there, so I'll talk to you about those when we get there. And then we're going to finish off the program with your symbol requests. The symbol requests, go ahead and put those in the Q&A box. And your questions, of course, we love getting your questions. And the chat room is for you to go in and talk amongst yourselves. We usually have a pretty robust conversation there. Just be sure when you're in the chat room that you use the drop-down menu above your comment to send it to everyone, not just to panelists, because we don't monitor the chat room. All right, without further ado, let's go ahead and get it going. Dad, what are you looking at?
Okay, I wanted to start out with looking at the Silver Cross Index and the input that we get for that index, for that indicator. First of all, this is a chart of the S&P 600 small cap index ETF, but just pretended as a stock chart. And notice that last week we have a negative stack on the moving averages. The 20 is below the 50, which is below the 200. But last week, price got above both of the 20 and the 50 moving average. And this is a great improvement in the picture for this particular stock. But let's go to now here's S&P 500 with the Silver Cross Index. It's still way low at 22% of stocks with their 20 above the 50. But notice that stocks above the 20 of the components there is that it has jumped from below 20 to 77. Stocks above their 50 has jumped from about 10 to 56. So you can see that there's positive action happening within the index. And of course, it's showing on the index itself. It's above all three of the moving averages we track on these indexes. So let's go to the S&P 500 SPY. Notice that we had a heck of a good week last week, and let me go to our climax assessment. Last week we had last week
we had 3.
Yeah, we had 3. The week before we started on Friday with an upside initiation climax, and then last week that was on a Monday, wasn't it? So Tuesday we had an upside exhaustion in climax, and then a flat day in terms of climaxes, and then Thursday an upside exhaustion climax, and Friday an upside exhaustion climax. So as we look at these, I've said before that it's kind of like reading tea leaves. You have to put them in context and see what is around each of the climaxes and how you want to approach it. But as we're moving higher last week, we finally ended up with an exhaustion climax on Friday, and the candlestick is a shooting star, which is short-term bearish. And of course, with a week like this, you wouldn't think it's going to get too bearish. And so far, it hasn't gotten that bad at all. Getting back to the index, notice that we got very oversold on the VIX. I'm sorry, overbought. And then you notice we had a short-term declining trend line, which it got above last week, and now we have a longer term, intermediate term, declining tops line, which is probably going to stop progress momentarily, at least. But at this point, the index is looking pretty bullish. Okay, let's move along to the other charts. We've got the US dollar ETF UUP. It's basically been pretty persistently up, and last week it started down. Let's get a little bit more history on that. Here's a 1-year chart, and you can see that there's definitely a breakdown, but we have some support here. Moving to the to gold, which should be higher based on last week's weakness in the dollar, but it's not. And overall, we've got a rising relative strength versus the dollar for gold, and but you can see correlation. It's dropping off to close to zero correlation at this point. But gold it did very well in October, and I think we're just taking a pause before it goes higher. USO in 2020, it dropped precipitously thanks to COVID, but it got up to, let's see, this would be West Texas Intermediate crude, got up to 129.50, and right now it's at 80. So we're not really doing that well on oil, and you would think we'd be doing better than we expected, but it's not. And I think it has something to do with the supply and demand. Bonds had a little rally last week, and it's dropping from that. And longer term, here's a 1-year chart. It seems to be bottoming at this point, and look at the weekly. Overall, we believe bonds are dead, but of course they're going to have bounces along the way. Yields last week crashed, but basically we have a rising trend line on the 10-year here, and it's gotten too far away from that basic trend there, and last week it corrected back. And so I don't think that yields are going to crash like a lot of people are saying. Looking at our yield to rate chart, we've got some weakness, as you see, in the last couple of weeks. But again, I don't think that this is going to be a major shift in the trend. Let me just show you a little bit. So there's the 2-year chart. Let's get that up. Notice we had a great advance a year ago, and then we have consolidation, and they're advancing out of that. Obviously, it's going to get harder for yields to advance, but I don't think they're going to crash. I don't think they're going to go down as fast as they went up. Here's Bitcoin. Basically have a flag formation here, but I like to see, this is a rising flag. I like to see a falling flag because it shows we're getting some compression and can bounce out of that. Overall, Bitcoin is doing much better than it did a year ago, and it's basically because of potential of ETFs being released on Bitcoin. You notice it's in a rising trend, but we're going to run into a lot of resistance here. There's a lot of congestion there. Okay, here we have the Magnificent Seven. I did a internet search today, and I had one wrong chart in the Magnificent Seven. Actually, Tesla is one of the Magnificent Seven, and I had Netflix, and I dumped it today. So, looking at Apple, having a rally, and we have a falling wedge, which basically we expect stocks to break out of that wedge to the upside. And Apple is doing that today. Amazon, there's the falling wedge and a breakout. Going to run into resistance up here, which is, no, I don't think that is an all-time high at all. No. So Amazon really took a beating last year and recovering somewhat, broken above the declining tops line here, but I think it's running into problems now. It's got a PE 73, which is, well, it always carries a high one. But that's the problem with these big tech stocks. They're all of them overvalued. Oh, one thing I wanted to point out, you notice the market cap on Apple is 22.8 trillion. Microsoft is actually challenging that. It's at 2.65 trillion. And I think it has a pretty good chance of overcoming Apple in that regard. Let's see, on the long term for Microsoft, okay, we're approaching all-time highs again. And let's see, Google, here's a rising wedge. And as expected, it breaks down from that wedge. We've got congestion here, looks at it's found support. Here's a much more reliable level of support. Quickly looking at the weekly chart. Okay, Google still, it's in a breakdown situation here, and it failed to reach its all-time high set in 2021. NVDA, we had a rounded top, and it's broken through that. Possibly it's going to go up and challenge the all-time high. Yes, I believe that's the all-time high. Yes. Here we have a flagpole and a falling flag, which is an encouraging formation, but the PE is 109. So there's a problem with that. Finally, Tesla breaking down from a triangle, and longer term, not particularly optimistic on that, because we have a rising trend line here, and it's broken down below that. So I think I've covered it all, Erin.
I think you have. Excellent.
Do we have any questions that I should address before I pass it?
That is a good question in and of itself. Doesn't look like it.
Nope, not. Okay, you got it.
I am up. All right, so as I said at the beginning of the program, what I'm going to do is we'll look at the sectors and what they're doing currently, and then I'm going to go ahead and look at the scan results for a scan that I did called Momentum Sleepers. And I ran that scan this morning, and I did find some interesting stocks in there. So I just wanted to give you another idea or another way to find your stocks. I do two things. I do what we've done here on Mondays. Often I will go to a sector, I will find an industry group I like, and then dive into that sector for some stocks. But one of the primary ways I select my stocks is by using my scans. I have I have a ton of them, to be honest. I think I have about 8 or 10 primary scans. We're getting ready to launch a scan alert product that will basically give you all of those scan results every day so that you can start like I do when I do my diamonds report and look at those stocks that I'm actually reviewing to select my diamonds in the rough. So I wanted to just give you a sense of what kind of results we get from those. But before I get started, let's go ahead and look at the sectors. All right. So as you can see, all of them have rising PMOs right now, every single one of them. Energy maybe is flat, maybe has lost its PMO, but it's still flat and it's not falling at this point. It doesn't appear to be. So really all of the sectors are clicking, trying to find really where the strength lies. Really, it lies in most of these. What we can do, though, is look at the stock charts technical rank down here, and that'll give us a sense of which one is showing better setup in the intermediate and longer term. So if we go by the scooter value, the places we want to concentrate are going to be in those aggressive sectors. That would be technology, that would be consumer discretionary, and that would be comm services. So while we're in a bullish setup right now, the market looks really good. The fact that the top 3 sectors are in the aggressive area says a lot, I think, for the market right now. Those are the areas you want to be concentrating in. And not to say that the other areas aren't good, but clearly the stock charts technical rank tells us that these 3 sectors are likely the place you want to be. I found a lot of interesting stocks within the discretionary sector last Friday in our diamond mine trading room, and I'm liking what's going on in that sector currently. All right, so let's go ahead and I'm going to go to the scan results that I had. And the best way to look at your scan results, basically, if you're a member of our Scan Alert service, which, like I said, hasn't launched yet, but will launch soon, you're going to get the list of the stocks, and you can add them into whatever charting program you want to add them into. I use StockCharts.com, obviously, and I load all of them based on the fact that I run a scan through them. They all load into a chart list for me, and I like to then look at the candle glance so that I get a good sense of, number one, what kind of stocks are being picked up on the scan, but also gives me a really quick and easy way to say no, yes, no, yes. That's really what I do when I start to look at these, is what looks good and what doesn't. So what are the things that I'm looking for on a candle glance chart? Well, I'm looking for a PMO that's rising. Well, fortunately, my scans already take care of that part of it for me. So I'm looking for a rising PMO, but at this point, I know I'm going to get that because that's part of my momentum sleeper scan. So really what I'm concentrating on is how the EMAs are set up. We were talking about negative stacks where you have the fastest EMA on the bottom and then it moves up. What we want to see is the fastest EMA on the top. So that's something that I'm looking at. I'm looking at broken support and resistance levels. So for example, the one stock that really came to the forefront for me when I was looking at this stock chart for Brady Corporation. And the reason I liked it was because we have this bounce coming off of the 200-day EMA. We have the 50-day EMA above the 200-day EMA by quite a bit. And we're getting a tiny breakout above the 20 and 50-day EMAs. I like that setup. So that's when I would call up the chart like I am now, and then determine whether the rest of it matches my trading style. So at this point, the RSI is still negative, but it is trending higher. So I would forgive that. We already know the PMO looks like we want it to. Stochastics are rising, but they are in negative territory. So this tells me this is an early riser, which is exactly what I'm looking for on my momentum sleeper scan. So I'm not going to have everything completely ripe on it, but it at least is setting me up on a stock that I think will move and do well. The problem I see on this chart would be, and would probably can prevent me from making this a diamond in the rough, and that is the fact that relative strength is starting to fail. The group is seeing less relative strength. This particular stock is traveling pretty much in line with the group, and since the group is failing, it's starting to fail against the S&P. So that is something that would probably prevent this from becoming a diamond in the rough for me, but it still is a stock that I think is worth your time on a watch list. So here's another one, Clearwater Paper, where we have the breakout above the 20 and 50-day EMAs. That looks interesting. Another thing we can do is not just look at these charts all in one glance here. We can actually go in and just let's organize it by scooter. So we have to give it a time frame here. Okay, so I'm going to actually do descending because I want the highest ones on the top. So one of the things that will happen when you do this is you're going to lose your style. But at least this gives me a quick look at which ones have the strongest scooters. And so if I'm going to go through here, now I want to find those stocks that have the price patterns that I like. There's Brady Corp. You can see a nice price pattern going on here. And it has a pretty good scooter value. So that could definitely keep it on the list. But I'm going to go ahead and get back to where we were. I'm going back to my custom style. All right. So let's see. Avnet looks interesting. We've got a little bit of a rounded bottom on it. So there we go. We can look at this one. Relative strength is still a little bit of an issue for this one, but certainly the stochastics are looking good. What are some other ones in here I had found? So some of these you've got, we're traveling in trading ranges, so that's not something I'm want to look at. You've got stocks that are failing at their 20 and 50-day EMAs, probably not going to be a candidate that I'm necessarily interested in. Onto Innovations looks kind of interesting. We have a nice high scooter value. We have price bouncing off the 200-day EMA, possible double bottom here. Looks like maybe a tiny little double bottom. The rest of the chart, we're still seeing stochastics rising. It's early. Like I said, this particular scan is going to pick up those stocks that are in early moves that are gaining some strength under the surface as far as momentum goes, which is why, again, the scan is called Momentum Sleepers. All right, I think I've gone through most of these. There was another one in here that I liked. Where is it? I like True Blue as a reversal candidate, but I would be careful with this one because obviously it's been in a declining trend. I think it's taking advantage of the current rally, so it could end this rally fairly quickly. So we have to be careful with that. It also has a negative stack on the EMAs. So we know going in on this one, if this is something you like, we know already that there's, it's making that turn, but it still has a lot of work to do to get those EMAs scheduled and put where they need to be. So while I like this reversal here, we really want to see what it's going to do with this area of overhead resistance. That is about, how far away? That's about 9% away. So there's still some nice upside potential on this in the 9% level. But at that point, that's when we need to be worried is it will hit that overhead resistance at these lows and at the 50-day EMA. So that tells me, all right, I like this stock, but I also know that my upside potential is somewhat limited. So that is another way you can go through and look at these. But anyway, it came up with some pretty good stocks. I thought there are some here that are in declining trends that aren't really exciting to me. And then, like I said, if we're in a sideways trading range like this, I better see price at the bottom of that range or I'm not going to be very interested. All right, that covers the momentum sleeper scan. Let's go ahead and dive into your symbol requests and see what you're looking at that you think looks interesting, and I'll see what I think of it. You'll have my opinion. We'll also look at how to time our entries and exits if we get some stocks that look good.
Okay, CBay.
CBay. All right. Simba Bay Pharmaceuticals. We've had a really strong rally in the market, and this one's really not done much with it. That tells me there might be some problems internally with this one. Relative strength just caught my eye right away. The group is not doing quite so well. This stock is not performing very well against its group, so it's underperforming the S&P. Maybe not a good place to be. Stochastics are above 80 though, so if you owned this one, PMO is rising, RSI is positive, so I could see continuing to hold it, but I would tighten up my stop. This is a really good area of support here, but if it drops too far below that level, I would be concerned. And this is wow. So even if we set our stop right here, that's almost a 5% stop. And that would be kind of where I would be looking at setting my stop. I don't think that I'd be interested in entering this one. Like I said, it just hasn't, it didn't perform very well while the market was performing well. And I think what we need to do right now are find those stocks that are going to ride that tide in the market. And this one's not really riding that tide. So I'd be concerned about it.
Okay, NAT for long.
Okay. Flag formation. That's came right to the forefront, obviously. Flagpole, flag. RSI positive, not overbought. PMO is rising. It has decelerated a little bit. This one has kind of the problem that the other one did. The market just had that huge week, and this one didn't. Spent the time consolidating. Of course, it had a really strong rally going in, so I guess we can give it a little bit of quarter there. A relative strength is not looking good. So again, I think that there are going to be better choices of stocks out there. Notice stochastics have also topped below 80. So I think that this looks interesting on the flag formation, but it does look like it really wants to curl and bend over rather than move back up like a flag would imply that it would. So I'd be very careful with this one. It does have, gives me the sense that it's starting to lose steam here.
How about a weekly?
Yeah, thank you for reminding me. We haven't looked at those. What do you think of the weekly? Whoops, let me get a bigger one. There we go.
Yeah, that looks decent, although it's at the top of the rising trend channel. So
yes,
there might be a pullback.
Right. So one of the things we'll talk about with that is that you've got the rising trend channel going on here. And when the price starts to get to the top of that channel, where's it going to go but head back down to test the bottom of the channel? So it can remain in a nice rising trend, but you could still lose a lot of price. So that's something to consider.
RVPH.
Okay. We'll get to a 5-minute here soon. I'm sure we're going to have a chart that is ready for that. Okay, so at this point, let's see here. I got to get my bearings on the chart. It's kind of it's a trading range chart. So that kind of, again, I'm not really a fan of those kind of charts unless price is near the bottom of that range, and it really isn't. It took advantage, at least somewhat, of the rally. At least it got 1 or 2 days. That looks like the pop there, and then a digestion phase. Overall, I see that this chart is okay. I just don't like the price pattern very much, but you can see relative strength rising for the stock against the S&P, stochastics rising. It's a low price stock, so be careful with that. It is up over 9% right now, so it is kind of looking for a pullback. This just isn't my style of investing. We're looking at, this is a little bit more speculative, and that's not my style of investment. I mean, this is where you'd want your support, is down here. That's 35% away. So that's kind of a big risk for price to have to go down all the way there to test the bottom of this trading range. So I would probably stay away from this one.
Let's look at a weekly, and then do you know the pharmaceutical symbol?
Oh yeah, XPH, I believe is.
Okay, that's the weekly. I don't even like looking at that chart.
No, I don't like this either.
It's not, not good or bad necessarily. It's just kind of ugly right now. There's no patterns to be.
Here's the pharma
There you go.
ETF. So pharma is looking like it's ready to make a reversal here. I just don't know about that particular pharma stock. It looks a little too speculative.
Yeah, well, you had two pharmas already requested, and it doesn't look like the industry group is all that great.
Yeah, it's making the reversal, which I like, but yeah, I wasn't too thrilled with those two pharma stocks that we looked at.
Hey, JP Morgan.
Okay, checking looks like it's above its 50-day EMA right now. 43.90. Yes, it is. So it's trading above its 50-day EMA. I do like this V bottom. V bottom patterns, for those not familiar, obviously it looks like a V, but the pattern is confirmed when you get 1/3 up, when you retrace 1/3 of the left side of the V. So we've gotten that. We're almost about halfway up. The pattern itself tells you that you're going to get a breakout above the left side of the V if you get that retracement of 1/3. So this is telling me we should see a breakout above this level on the left-hand side of this V, because this is a confirmed V bottom. We have a PMO buy signal coming in. We have stochastics rising in positive territory. RSI just moved into positive territory. I think if I had a complaint about this one, it would be the relative strength issue here. I would like to see it doing better against the S&P. Fortunately, the S&P is doing pretty well, so maybe we can forgive that a little bit. But overall, I have to say, I think JP Morgan looks pretty good on the chart here on the daily. Let's look at a weekly.
We've had a lot of charts that are sideways like this, and it instantly screams for a weekly.
They do. I'm not really thrilled with the weekly chart. Certainly the weekly PMO is not encouraging. Yeah, I don't know. What do you think of this weekly chart?
Well, it's broken down a rising trend if you draw a line from the other. So it's broken down there, and it's also broken down for horizontal.
Yep, right here.
Actually, it recovered that, didn't it? So
yeah, it did. It's coming back to life from there. But ultimately, I would say this wouldn't be on my intermediate term investment sheet. I would want to keep this closer to a short-term trade. We didn't talk about a 5-minute chart, so let's look at this. This is JP Morgan's 5-minute chart. It's 5-minute candles with a 5-minute PMO and a 5-minute RSI, as well as a 5-minute on-balance volume. What you're looking for an entry is a positive crossover on the 5-minute PMO combined with a positive RSI. That's your buy point. A sell point is basically whenever the PMO turns over. That generally is going to get you out at the top of a downside move, or at least near the top of a downside move. Currently, we have the PMO surging above the signal line, so we are at a buy point for JP Morgan. It already had its prior buy point back here at 143.57. So obviously you're not going to get it at the best buy point for the day, but given this move on the PMO, it does suggest that we're going to see higher prices on JP Morgan today. So this does look like a pretty good buy point.
Hey, URI for a long.
Business support services. Everything going pretty well on this chart. The big problem I see is this giant bearish engulfing candlestick right now. A 3% plus decline. It certainly needs to digest that breakout that it had, that rally here. We had a breakaway gap. This is starting to look low like an exhaustion gap already. That bearish candlestick tells me we should expect some more downside. It's happening right at overhead resistance. We have a bugle pattern here. If you look, you've got kind of, this isn't rising up, but we're getting more volatility as we move across. So that's usually a problem. Volatility isn't your friend. I wouldn't want to get involved in this one until I did see the breakout, because this really looks like it's weakening and ready to move lower. PMO is decelerating slightly. Doesn't look terrible, but I don't like the way it's acting right now, at least today.
CIEN to buy.
All right, we've got a V bottom here. It looks like it's retraced about 1/3 up the pattern. PMO on the buy signal. I like stochastics right now. It's traveling in line with the SPY relative strength wise. And that's acceptable because I feel good about the market. RSI is positive. It looks like it's digesting a prior move here, a prior rally. I like this chart, 5-day EMA crossing above the 20-day EMA. I think that this one has potential. Let's look at the weekly chart to see how much potential. That's more of a trading range stock on the weekly chart, so not really one of my favorite patterns. PMO did turn up here, though, on the weekly chart, whipsawed back into a buy. It is near the bottom of this trading range. What's our downside risk here on the support? Yeah, it's about a 10% downside, 9.5% risk to the downside, but our upside potential is close to 24%. So I like the setup here on the weekly chart as well. I think that coming off of this level of support is very interesting. 5-minute candle. Really, it's been kind of just consolidating this big loss that it started on Friday. I think you're at a buy point. There's really doesn't look like it's going to get much higher, but it doesn't look like it's going to get much lower than this level either.
Okay. Microsoft, we've already covered that, but he wants to know for Microsoft for a long-term hold. So let's take a quick look at that.
Yeah.
And look at the weekly.
Yeah, we need to go to the weekly if we're talking long-term here. And I would even look at the monthly. So it's getting ready to hit all-time highs. Everything on the weekly chart does look positive for Microsoft. PMO is turned up. Looks like we are going to get a breakout to new all-time highs here for Microsoft. So I think it looks pretty good there. Let's just look at a monthly chart real quick. Get that. It's going to be small. I apologize for that. Boy, look at that parabolic breakdown. It's fascinating. Looks flaggish to me.
I missed the PE.
The PE is 34.49.
Yeah, so it's kind of high, but they tend to carry high PEs. But
yeah, I mean, I have to say I like it at this point, but I'm not. I mean, I don't feel that great about the market in the long term. I mean, I think we're looking good here. I think it's going to be moving up in the shorter term, but I'm not quite so confident about the intermediate and long terms. So that's why I would consider most of your investments right now in the short term rather than intermediate or long term, at least until we know that this is going to be a really good established uptrend in the intermediate term.
XLF.
All right, well, we can go under the hood here. All right. So this is the financial sector spider, double bottom. It did hit the confirmation line and turned back down. So we don't have a confirmation of the pattern just yet, but PMO rising. Look at the percent of stocks above their 20 and 50-day EMAs. We even have 50% of them above their 200-day EMAs. There's a lot of internal strength here. But the one problem you have is that this is overbought. I mean, a 91% reading on percent stocks above their 20, that's really overbought, and really begs for a bit of a decline. And it looks like we're getting somewhat of one today. It wouldn't surprise me if we saw a little bit more pullback here as it waits to break above that confirmation line. But I think that this looks good. Silver Cross Index has given us a bullish shift across the signal line, so that's a good sign. Like to see the Golden Cross moving up, but overall, I mean, I think financials look good here. Just looks like they're a little weak as they come up to confirm this double bottom pattern.
Look at the relative strength panel. I had a comment on that.
Ah, yes. So we do see relative strength improving somewhat here.
Can't see it. Okay, that's because
yeah, it's kind of
small. Up a little. There you go. I just wanted to comment. It's notice it's running flat, which is not a problem. Because it's basically the same as the S&P 500 at this point. It's as strong as the S&P 500, and on the right here you have a scale, a vertical scale. Ignore that; it has nothing to do with anything.
Right.
And this particular calculation is worthless.
Right. We're more interested in the direction, not the value.
Okay.
So yeah, it's traveling in line. I would say, remember, we were looking at more aggressive sectors. This is where you're going to see better relative strength. Although technology is about the same. I think discretionary was the one I was looking at last Friday. You can see better relative strength when you're looking at some of these other sectors. So that would be my one comment. Financials look good, but some of the other sectors look a little better.
Okay. The symbol is $X. I don't think that's a symbol.
Probably looking at
X.
US steel.
Yeah.
I talked about steel, I think it was last week or the week before, as starting to look good. Here, I need a sip of coffee here. Too much talking. I like the breakout here on US steel. I think US steel looks good. PMO is ready to give us a buy signal. Traveling in line with the group. The group is traveling in line with the S&P. So we're seeing kind of a little bit of outperformance here on US steel. But ultimately, it's at least traveling in line with the S&P. And again, with the S&P looking bullish, we'll accept that. So I do like this one. I certainly think that we could continue to hold this one. I think it's a buy candidate, but let's look at the weekly chart. Weekly chart looks strong. Got the breakout here. Lots of upside potential to get us up here. That'd be about a 12.6% gain. So there's still a lot of upside potential on it. And scooter value very high. I like it. 5-minute candle. As far as buy points go, you've got a PMO crossover sell signal here on the 5-minute PMO. So I think you might be able to get a better buy point here. I mean, certainly there's no reason you can't buy when the 5-minute chart doesn't tell you what you want it to tell you. But if you have the time to keep an eye on it, you might improve your entry by waiting this one out a little bit. Looks like it might go back down and test this area of support before it takes back off. So you might be able to get a little better buy point than right now.
Okay, SAP for medium-term hold.
All right. Well, we've got a nice new silver cross, positive RSI, PMO rising, stochastics above 80. I'd say relative strength is acceptable here, traveling in line with the S&P, actually outperforming it to some degree over this past month. Looks pretty good. Upside potential before it hits resistance is about 5%. So upside potential is a little bit limited. And I say upside potential as I'm looking at where the next area of resistance is. Where might this stock stumble? And so that's why I'm looking for as much upside potential before we hit resistance as I possibly can get. And this is pretty good. At 5%, I would like to see something more because I would want my stop probably in this area here at about 4%. Something to consider. Let's look at the weekly chart. Weekly PMO, gosh, it turned up, but it's acting like it wants to turn down again. That's kind of weird. I would say ultimately it's turning up, so that's a good thing. Scooter not quite in the hot zone above 70. I'm always looking for a scooter above 70 because it tells you that that stock is in the top 30% of its universe, be it large caps, mid caps, ETFs, and that it's in the top 30% of its universe as far as intermediate to long-term potential. It's really a great way to kind of stack up stocks against each other. We did that earlier. Okay, so flag formation.
Yeah, and it's kind of a trading range for all those years.
Yeah. Doesn't offer that much there, but there's that upside potential of about 5%. This is where I'd be looking for it to go if we can continue this rally. That's about 15%. So I think there's some pretty good upside potential here. We are at a sell point. We have the PMO in decline and it just crossed over its signal line to the downside. So certainly not a buy point. I would be waiting it out. You're probably going to be able to get it closer to the low of the day.
EEM.
Emerging markets. Nice double bottom. Don't like the filled black candlestick here. That's a bearish formation, but that's a one-day formation. So it's not going to tell us that for the next week it'll be going down or anything. It's just suggests a bearish outcome tomorrow. PMO rising, stochastic is above 80. It's doing all the things that I'd want it to do. Here's your first level of resistance, which is about 3% away. This is where we're looking for it to get up to, and that's about 8.5% away. I think it looks pretty good. It's a little bit of overhead resistance I'm not thrilled with, but we did get above the 200-day EMA here, and it does look like it has some upside potential. Weekly chart, trading range. At least we are sort of near the bottom of that range. Yeah, you'd want to stop probably down in the 7% range below this level. Like I said, upside potential is almost about the same as your stop. It's about 8.5%, 9%. So that's honestly not the kind of risk reward that I prefer, but certainly does look like there's some upside here. Could certainly break out. PMO is turned up on the weekly chart, so not bad. 5-minute chart, another PMO in decline, so you should be able to wait it out for a better buy point. But I would say this one isn't bad. It's coming at this low right here that we had on that pullback earlier. I think it wouldn't be a bad buy point.
Okay, the next one I think is Coinbase, COIN.
Coin, yes. See, you're going to start knowing all these symbols too. That's what happens. All right, Coinbase. Looks like a nice breakout. Well, not quite breaking out. It's trying to break out from this trading range here. It looks like it will break out. I'm not too worried about that, given the way the PMO is accelerating. RSI positive, stochastics rising nicely. This is the first one we've looked at that really had nice rising relative strength too. So I think we picked out a pretty good chart here. Like I said, you're in the trading range, so you are vulnerable to a drop back down to the bottom of that range. And that's pretty hefty. That's a 20% decline here. It doesn't, it looks a little more benign on this chart, but we're looking at a very volatile stock here. So that's a lot of risk. That's a lot of risk on this one. I would definitely want that breakout to show me that that we're gonna get the breakout, that we will get a move back up to these highs over here, which would be a 30% gain. So it's risk reward. What's your risk appetite? Can you have your money out there on something with a 19% downside risk, but then you could get another 35% on the upside? That's a tough one, and that's something you'll have to decide. But I think this chart does look good. I would just be really careful with that kind of risk reward setup. Weekly chart. It's, I don't know, I'm not getting any great vibes here, but I'm not seeing any real negatives.
Slightly positive.
Yeah, I would say so. Nice scooter value and weekly PMO rising. So Coinbase looks pretty good here. I would just say the volatility would have me very, very nervous about this one. I would definitely position size wisely if this is something you want to try out. And this isn't something you do often. Definitely position size wisely. Take a very small position just to protect yourself. 5-minute PMO looks like we're going to get a lower price than this level, but honestly, I wouldn't mind making this a buy point just because PMO's now oversold. It's hit this support level where it's been turning back around. I could see this as a possible buy point, but if you have time and it breaks down below that support, well, you might as well wait it out. You're going to get an even better buy point.
Okay, Verizon.
All right.
Easy.
Easy.
David Bahnsen recommends this one on Barney this morning.
Oh, he did?
Yes, it's because it's got a yield of 7.35%. And he's saying that's a pretty solid, pretty safe yield.
Yeah. Looks that way. It actually, the last time their dividends increased. So this year this last time they paid more. The chart looks good to me. Relative strength is pretty much in line with the S&P. I always like to see outperformance, but when the market's clicking, I don't mind seeing price in line with it. RSI is positive, not overbought. PMO is getting overbought. Looks like it is kind of overbought. Overall, I mean, I think the chart looks positive. We have a silver cross. Resistance got hit here, and that's why we're pulling back a little bit. I like this one as a pretty solid investment here. Weekly chart. Nice breakout from the declining trend. PMO buy signal going on the weekly chart. I like Verizon right here. Let's look at the 5-minute chart.
Let's look at the monthly on that.
Let's look at the monthly chart.
Okay, so that I don't like so much.
Yeah.
The top, and there's a lot to go down.
Yes.
But the monthly PMO is rising at least. So
Yeah. We've
maybe
seen
that's
it
the
stutter.
decline.
Yeah, we've seen the PMO stutter a little bit, but this does look like the best it's looked in a while. Pretty strong support here, but overall that kind of rounded top here isn't very appetizing. But I do like that break of this declining trend on the weekly chart. I think that looks pretty good. So maybe not a long-term type of investment, but certainly something short to intermediate term, I think, on Verizon. 5-minute chart. You're at the buy point, I would say, because you have the PMO had the positive crossover. We just got the RSI positive. So it's back in negative territory. So if you're conservative about it, you may not want to purchase just yet until the RSI gets positive. But personally, seeing it consolidating here at this low, I would be looking for this is a pretty good buy point, to be honest. I like it.
Okay, so 2 minutes actually. SAO.
Okay. All right. And then I'm going to do Starbucks. I did forget, I promised somebody that one earlier. So last but not least, you'll get your Starbucks. All right. So Saratoga Investment Corp, SAR, double bottom, which I like. Breakout above the 50 and 200 day EMAs, positive RSI, rising PMO, stochastics above 80, relative strength rising pretty much. Looks like a good chart here. Let's look at the weekly. And I like the weekly okay. This does kind of is rounded. I don't like these rounded top looks. It hasn't broken that declining trend yet, but the PMO, the weekly PMO has decelerated, and we do have a scooter that is above 70. So I would say that this one in the short term looks okay, maybe a little iffy in the
1 minute. 1 minute.
Okay, last one, Starbucks, I promised. This one, I think they listed for a short.
Yeah.
Yeah, I wouldn't be looking at it as a short. This is a pretty strong move off earnings. We've got a silver cross. It is overbought based on the RSI, but everything else is really looking good here. I would say that you're going to see more upside coming out of this one. I think a short would be a little bit of an iffy here. I don't think I would be going short on it. And weekly chart, we're breaking this declining trend. So that's positive for Starbucks. We also can see that there's a weekly PMO buy signal on tap. So that's it. That's all we have time for today. And we appreciate you joining us. If you'd like to join us live, you will find a link under the YouTube video for that. And with that, we will finish with a good luck and good trading.